You know, there still could be a lot of money on the sidelines here. So just remember that you may have some some activity that isn't air quotes normal. All right, so of course we've got to talk about the risk factors involved with trading. Remember, you're always going to have losses, and the idea is to not trade with monies you can afford to lose. Only trade with monies you can afford to lose. No rent money, no food money, that sort of thing. Just use good old common horse sense. All right, that's me. Been at this for a long time. Live down in Southern Oregon in the valley here, known as the Rogue River Valley. About, I don't know, I guess we're about an hour from the Northern California border. All right, so what we like to do every day, I like to look at this every day, is news events. Make sure I'm not missing anything as far as known news events. Find that to be very important because I don't want to take trades just minutes ahead of a big news event. So what I do is I look at a couple of different things, and if you've been following me here here on these Nadex breakdowns, market breakdowns, these are the two that I like to review: Forex Factory and MyFX Book. And frankly, I probably use, well, I know I do use Forex Factory more often than the others. So that's we're going to just quickly look at both of those for the news for the coming weeks. So give me just a second to load those up. So we'll do that. And so the first one we'll take a look at here is from forexfactory.com. It's a free calendar. Both of these are actually free. And what I do, and I mentioned this before, but I like to come up here to the filter section right here in the upper right corner, click that, and then just uncheck all these boxes. And the only one I want to pay attention to personally is the high impact news event. So that's the red folder. So I keep that checked. And then what it'll do is it'll sort it. And you can see only listing the high impact events. If I put on these others, look at this. It's a lot more to filter through, and the yellow ones really don't mean that much as far as market movement. The orange ones from time to time, yes, but as I mentioned, I'm really just focused on the high impact events here. So for this week, you see here, of course, yesterday there was no news that we can trade on Nadex, so we're not really interested in that per se. But on Wednesday, we have, by the way, this is all East Coast time, we have out of Canada a couple of big news events here, and then out of Australia in the evening, so you want to pay attention to those. Thursday, one event out of the US, and then again out of Canada, and then you see here, we'll come down here to Friday in Canada as well. Now, if we look over on MyFX Book, I've already sorted these down. Again, you can see sometimes they'll list the news events that are different or not on the Forex Factory calendar, so you may want to check those if you're at all inclined to. So anyway, those are the big ones, and you can see here nothing's going to affect us this morning as far as news goes when we're looking at the charts, and we're going to do that here in just a moment. And yeah, all right, so next screen here, we already did that, so let's go ahead and look at some charts here. Let me pop those on the screen and we'll start talking about them. So first thing I noticed this morning was gold taking a big move to the downside. Now it's recovering some of that move, but also just before coming on the program here this morning, I caught this, and I had not noticed this earlier. That's why it's always a good idea to just kind of review a quote board, because I do that as well. But you can see the percent change here on the quote board in the left portion of your screen. Right down here, let's grab the pen. Right down here, I have silver. Silver is a big mover this morning, down 1.5%. And you can see here, other than natural gas, which is down over 2%, and crude oil, down a little over 1%. Silver is a big mover here. So I was going to spend some time this morning on gold, and I'll still try to do that. But I think what I'm going to do right at the moment here, let's just move over, take a look at the silver market and what's been going on here. So I trade from a top-down perspective, meaning I look at higher time frames and work my way down. And that's what you're seeing here on my workspace. And these are all minute charts per se. I do have a daily chart here in the lower right corner. So let's take a quick look at that July silver. And you can see where it's coming into a big support region right down here at the bottom, this green, darker green zone that I have marked off here. A lot of big support level down there for this contract. My indicators here are indicating, which is what they do, right? Indicating that the energy or the momentum at the time is to the downside. So I'm going to move forward here a bit to a 4-hour chart. Oh, let me see here. We got, yeah, good morning, everybody. Just looking at the comments here. Raining in Sweet Home, and another beautiful day, another step towards financial independence from Ollie. All right. And good morning, Michael and Mike. Bertrand, yeah. So here's our 4-hour chart. So I have, as you can see here, a couple different areas marked here on the chart. And what I'm doing here is I'm just marking off zones of support and resistance. The dark green is a more important zone than the lighter green, if you will, and the light red, not as important as a dark red if I had that on there, which I don't at the moment. But you can see where the market is at the moment. It came down into this support zone right here on that candle. That was the prior 4-hour candle is a big candle, and now the market is sitting here just kind of between the two zones. But look at the slope of these indicators, these top two indicators. That's what I'm looking at here, and I'm looking at that because that's telling me where the energy is here in the market, the direction of the energy. If you couldn't tell by price action, the indicators just help in assisting that in that regard. So you can see a lot of energy to the downside here. Now, does that mean the market's going to just keep falling off the table? No, it's not at all. That's why I mark off these zones, because markets move into support and resistance zones and they'll react. You can see here how, as an example, the market whoops, let me try that again. Here, we'll fix that, grab that. There we go. So the market reacted here, it bounced, right? Bounced here, really took off. And in fact, reacted here at this line a couple of different times. So just a little nugget here for you: when you're trading and you're in a position and you notice the market comes to a support or resistance level for the first time of a test, don't be surprised to see it react. A lot of times people start sweating when they, market bounces against their position. But if you analyze the market and the energy in the market correctly, that shouldn't be a concern. All right, so moving down, the market is now trying to essentially absorb the energy to the downside here off of this time frame. Let's move down here because we got some other markets to look at this morning as well. This is the 81-minute chart. Doesn't really tell us a whole lot different. We still have a lot of energy to the downside. The middle indicator, the oscillator here, clearly shows that we have a downtrending market when it's staying down in this range here. That's how I can say that. Now, the other thing too is my upper indicator here. This is my momentum indicator. You can see how it shifts color. It was a dark red and now it's a light red. So telling me it's starting to lose momentum to the downside here. Now, not that it's going to flip, but just that it's not as strong as it was. You can see that here on the 4-hour chart, the 243-minute chart as well. So it just giving a heads up. Now, if you've been following me at all for any length of time, you are aware, or should be aware, that I am a big believer in divergence and identifying divergence and trying to take advantage of that. Now, this is diverging here at the moment. It is not divergent. And here's what I mean. Okay, so you see essentially from low to lower low, and then we have this low in momentum. And this is still angling down. What I need to see for this to tell me this is divergent is actually for it to actually hook up, to put in a low that I can extend my line to, and then that might provide an opportunity. And you can see where the oscillator is here, so that would probably more than likely turn up as well. So those divergent moves, I look for the market to then seek out the nearest level of support or resistance. In this case, that would be resistance, which is the bottom here of this zone. Any questions on that? Now, again, not divergent yet, just diverging. It's in the process of trying to set up for that. So let's quickly move down here to the 27-minute chart. So you can see the process is just basically the same on every time frame, but you'll see different or more details. All right, so we really have a lot of energy still to the downside in this one as well. You can see here everything is obviously to the downside. So the market's trying to absorb that energy here at the moment, and whether the buyers will start to come in or sellers will continue to push the market lower. All right, so just you can see here how far the energy just kind of fell off the table here along with price, and now starting to be absorbed. It doesn't move straight down or straight up for very long. So on a bounce here, looking at this time frame, you see the market came right up here to just below the upper resistance zone here at this point, the top zone here, and now we have an inside candle here, so kind of some indecisiveness at the moment. And so what I would like to see, actually, for a continuation move to the downside, what I would like to be a part of is a retracement here, a deeper retracement, basically from this high. We'll use the Fibonacci tool and just mark off a little zone, and I like to just mark off from the 382 to the 618. Just kind of mark that here on my chart, so I have a good visual of where that is. And the reason being is because a lot of traders will look at that range. So if the market pulls back into that, that could provide a selling opportunity, a better one than just trying to get short here, which would be kind of after the fact. I want to sell high and buy back lower. So I would prefer to see the market kind of move into this range. And I draw the box because I can get rid of the drawings and not to make the chart any more cluttered. All right, so you can see how, based on the cycle study here, the oscillator, it is actually pushing up. So we're looking for a continued cycle higher here. Trying to confirm, oops, sorry about that, trying to confirm the cycle low at this point. So that'll come in when this goes just about, right about now. It's trying to confirm a cycle low. So here's the idea, the plan at this point with this market. Something like this, and then come back down. And so this will rotate back to the upside, hook over, and that could provide a shorting opportunity. That's what I'm going to be watching for here in this market. Does that make sense? Because we have the energy on the higher time frames to the downside, and just looking for a retracement or a bounce here this morning. Okay, cool. Yeah, if you have any questions, feel free to type them in the box there on your screen. Happy to try to answer them for you. It's good to see a lot of people in here this morning, especially after the holiday. All right, so that's silver, so I'm going to keep an eye on that. That's at this point. You can also see a little bit of a push higher here off the 3-minute chart, but that I drew the box off the 9-minute, and you can see how it appears on all the time frames here. So we'll look for that retracement up into the box there. We are all here because we want more holidays. Okay, Michael, I hear you. All right, so let's move up here and take a peek at the S&P. Not much going on here this morning. You can see it's up 1 point. That's the very top here of the quote board on the left part of your screen here. Not much action at all in the stock indices here coming into the opening bell here in about 15 minutes, but we will take a look. Need more money, says Mike. All right, man. All right, so this is the June S&P. So we will, let's see here. So you can see the different, there we go. See the zones that I have marked off here. These are actually from last week. I haven't done anything different. The market just, pre-holiday, we had some bigger days than others, but for the most part, I don't think there was a ton of activity. Market's in a little range at the moment, a channel. on this chart. This is the 243-minute chart, or on Nadex, you could use the Nadex charts, a 4-hour chart. And there's the channel. So first and foremost, I want to see the market break out of this range. I don't like to, personally, I don't trade when the market's in a channel as far as directionally go, as a specific direction goes. I'll spit it out. But we have no momentum in the market at the moment here over the last, 8 to 12 hours here, so to speak. Momentum is just grinding sideways here at the moment. So I want to see the market break out of this range, and then ideally I'm a breakout retest guy. I don't trade the breakout per se. Now that's not always the case, but a high percentage of the time I prefer something like this. Let's say the market were to break out to the upside. I would look for a retest of the range, so the top of the range. In other words, for the market to come right down here to the top of that box I drew and try to re-enter or try to get on board at that point. And then look for a bounce off of that level and look for something like that. Same on the downside. If the market were to break out to the downside and maybe come back here and retest and then look to get on board to the downside. But right now, I'm not interested as far as the directional trade goes, as far as buying any binaries or selling any binaries, because of no momentum in this market at this point. The higher time frames rule with my methodology, and you can see that channel here a little bit better on the 81-minute chart. Yep, buy support, sell resistance. You got it. In fact, just another note here with that range, that blue box I just drew, check this out. And just eyeballing it. So look where the market is at the moment, almost spot on, dead center of that range. See that? But right, spot on. So I don't want to trade from the middle of the range, because what can happen? I've got a 50-50 shot going either direction. So let's just kind of remain on the sidelines here for the time being until some buying or selling comes into this market a little bit later here today or later in the week. But there's a little better view of the range. In fact, if we can come all the way back here off the 27-minute chart, half-hour chart on Nadex, right? You can see this was the 23rd at 2:24 p.m. Central Time, as the market just started to go back up into this price level here, and it since then has just been moving sideways. All right, so I think that's all I'm going to spend, all the time I'm going to spend this morning on this. As I just kind of gave you an idea of what I'm looking for as far as trading opportunities with this. I want to see it break out and establish some sort of momentum trend in the market. And at the moment, that trend is sideways. All right, so let's look at a Forex pair. The pound US dollar, so the Great British Pound US dollar, kind of basing here as well. See if we can get there. There we go. All right, so can anybody let me know what you see on this chart at this point in time? What's the market doing? Let's get a little early morning interaction here. Yeah, good call, guys. Flat sideways, that's it. See, this is the kind of market I don't want to trade. In other words, buying a binary per se or selling binaries. There are other strategies you can use for sideways markets, but directionally, time is your enemy or your friend, just depending on how you're looking at it. So if you're looking for the market to break out of this channel, yeah, good job, Kathy. In other words, here's the channel right here. And if I was to step in, because I'm for some reason I was anticipating it to go up, and I'm not anticipating that at the moment. But if I was, I have to sit there and basically hope that the market is going to break out, right? So time is not your friend in that regard. So rather than do that and sit on my hand or sit on the the edge of my seat, I'm going to wait for something to actually happen. Again, look at this indicator here. Now, if you don't have bar chart trader, which is what this program is, and that indicator it's specifically designed for bar chart trader, you can use your own momentum indicator. A lot of charting programs have momentum indicators. It's not going to be exactly the same, but it'll give you an idea. Okay, so just throw that your way as well. This is trying to put in a bottom here, trying to cycle up. So, but again, we don't have any energy per se to the upside or to the downside, much like the S&P. But let's sync this to the other charts and take a look. We'll come down here to the 81 minute. So the charts go in multiples of 3 or divisible by 3. So 81 minutes times 3 is 243, which is the first chart we were looking at. The one under this is going to be a 27-minute chart. So again, here you can see the channel. So again, just as I mentioned with the S&P, excuse me. Just as I mentioned with the S&P, you want to see the market break out, right? You know, something like that, or to the downside, same sort of thing. Come back and retest the range, and we could probably even shore up or tighten up that range that I drew. Let's see here, right in here. That's probably a little bit more accurate. We just ignore the wicks there, but I like to include the wicks. So I look at a candlestick as the real body, the open close as a primary support or resistance of that candlestick, and then the wicks would be secondary. So I still consider those. A lot of folks don't even realize that you can use those points as support and resistance, and you absolutely can. All right, so again, we're stuck in a range here. I don't know that there's a whole lot to do at this point. I'm not. If I come up here to my smaller time frame, my 3 minute, there's kind of a triple bottom inside this range, but it's already, you can see your middle of the range. Getting a little bit of buying here at the moment. All right, so let's look at another Forex pair, see if we got anything that's moving here. Let's look at the US dollar, Canadian dollar. And again, I'm going to start here on the 243-minute chart. And let me just adjust this a little bit here. Okay. So not unusual price activity coming out of a holiday or even going into the holiday is that sideways action. And why is that? This is a question I'm often asked, is because a lot of the money just leaves the market for vacation. You know, Friday would be a very quiet day typically. Fund managers close up shop, what have you. But do you see the big channel here on this one as well? And this is the type of, if you're not familiar with how to trade these channels or wait for them, then they could just chew you up. But there's a big range there. Right, so there's the midpoint of the channel. So the market has, you know, in that upper third of it now. Right, so I'm going to still work my way down here because, so let's do this quickly because we're running out of time here this morning, but let's do this. So let's look at the indicator here. See, that's up. I'm in the lower right portion of my screen. I'm drawing arrows up, up. So it's energy to the upside, And I want to see what the predominance of the energy happens to be. What's it doing? Especially those higher time frames, as I mentioned earlier, that's what I pay particular attention to. The smaller time frames will cycle inside of those bigger time frames, which is fine. But if I'm going to trade it to the upside, you can see that I have my 4-hour chart, my hour-and-a-half chart are energies to the upside. The market has made a move, and now it's pulling back. So let's come up here. Actually, we'll use the 9-minute chart. All right, so see how it's retraced back to the top of this zone here. So see how it broke out? This is actually a good example of the kind of thing I was talking about on those other two markets. in this case, when the market was in the middle here, just wait for a breakout, and now it's retesting. Recall the energies are to the upside, so now I need to see that my oscillator hooked to the upside. I'm okay with this 3 or 9 minute energy momentum to the downside here at the moment. It's also white, so it's weakening to the downside. So I'm looking for a bounce now at this point. And that would put us potentially in line for an opportunity to the upside with the higher time frame momentum. And ideally, because I'm a chart pattern guy on top of this, is I would like to see, like a little head and shoulder pattern shape up here. We have a left shoulder, a head, and maybe a right shoulder could take shape in here or something. But we may not get that. So again, so now that's the 9 minute chart. I want to go to the 27 minute chart and see if there's anything telling here. Let's mark off. I don't have the support zones marked off here, so let's do that. All right, so you see where that touches here, over here. By the way, if you haven't figured it out yet, I like to kind of teach as I'm going through here with this rather than just tell you where I'm buying or selling. So that's kind of a support zone there as well. On the upside, yeah, so right through here, a lot of touches through there, and that kind of goes there. So that's kind of the important area right now. So we still have some positive momentum, but it's just cycling back to the downside. So the market basically ran into this resistance level here and ran out of steam. See that? Everything cycling back to the downside here. So this is an area or a zone right in here that I will watch for a potential reversal. There we go. How many of you, let me just ask you all a question. There's quite a few people here this morning. How many of you have, you open up your charts, whether you're on Nadex or wherever you might be, whatever charting platform, and you don't really see anything that's super good, but you want to just, you absolutely have to place a trade? I've had that happen. Yeah, I think, in fact, just looking at the answers that are coming in, like 90+%. You have to fight the urge. That's right, you do. Yeah, so and the reason I ask is because that's one of the biggest downfall for us as traders, is that we think we have to have action all the time, and you don't. You'll have to keep in mind everything cycles. In fact, I call my style of trading cycle trading. So there's cycles, obviously there's cycles in the seasons, right? The moon cycles as an example, but price action cycles, there's seasonal trading opportunities in the markets as well that cycle. But even here, the number of opportunities cycle. So your best bet as a trader, in my opinion, is to wait for opportunities that are presented rather than basically fishing for them. Wait for the opportunity. Basically, you're waiting for the fish to swim right around your boat and you can see them, rather than throwing a line in there, sitting there for hours waiting for it to move the way you think it will. Yeah, it is very hard to wait. Even in demo, I think one of the things that happens with the demo trade is that you don't always take it into consideration or treat it like a real money type of trade, and that's really something you definitely have to do as best as possible. We can get a little trigger happy on the demo as well. Okay, so you can see here on the 27 minute, the market is trying to find this support level here. Trying to hold this. All right. Or Michael said, or frantically throwing your line in the water and getting it caught in a tree or something. Yeah, pretty much, right? So my whole point with this is trying to just show you. You saw some of the markets here this morning. First day out of the holiday, we're going to have to be patient. Don't be in a hurry to give your money to someone else. You work extremely hard for your money, and it doesn't matter if it's $50 or 50,000 bucks. You got it. You worked hard for it. Don't give it away. Wait for good opportunities to materialize. Wait for the market to be on a move and start to some sort of direction or trend, some sort of chart pattern. I'm a trader that trades momentum and chart patterns together. And you can see here, identify these support and resistance zones. And the reason being is because the market moves from zone to zone. The markets move from zone to zone. Just real quickly, last week, let's see if I can find this. See, now the S&P is moving as we're coming. We just have the opening bell, but what I want to do here is see if I can find that from last week here. Give me just a second. I guess I'm past it. So last week, for those of you that were with me here, I marked off, yeah, here we go. 23rd. Marked off an area on the chart on the, I guess it was the NASDAQ here. I'm just trying to remember, but that I was looking, there it is right there. Looking for the market to dip into. No, that's not it. The market came in and just barely ticked that area. If you happen to be marking the area on your charts as well, and then rallied out of it. I'm not finding the thing I want to talk about now, but again, it's just going through and identifying support and resistance zones and that are likely to get hit. In other words, if the market's moving from one zone to the next and momentum is with that movement, there's a good chance it's going to go to the next one. There's no guarantees, but you can see here, just looking at the crazy clown paint I have here on my chart, you know, the market went from this purple zone here. Actually, let's start right here. Went right there, tested it, and then went through it, came back, tested it. Just again, zones, just zone to zone, and then all the way down to the green zone. Tests here, finally breaks through it. See the rhythm in the market, the cycles, up and down cycles here. So it tests support, and again, if I had this drawn correctly here this morning, you can see this. That's just breaking out of that zone. All right, I think that's going to do it for today, folks. So we got some things to watch. I just, you know, this being the NASDAQ, it's moving a little bit here this morning. Let's see here, it's up about 0.5%. So definitely the leader here of the stock indices this morning, the NASDAQ. On Nadex, it's the US Tech 100. So you may want to keep an eye on that. But again, same sort of analysis I would do on that as well. We're running out of time here this morning, but here actually we have a little bottoming pattern that's developed here on this 4-hour chart. Kind of a double bottom. Let's see here. Yeah, this is kind of a double bottom that's formed in through here. And we'll go there. Gary, is there a book that explains the relationship in the currency binaries? Gosh, I don't know, Gary. I just trade the charts themselves, but I'm sure you can Google it and find out information there. Just because there's a lot of information on the web, or you may even want to look through some of the archive videos on Nadex here. They could have some information as well. All right, everybody, I think that'll do it for this week, and we'll get back at it next week. Hopefully, if nothing else from today, maybe the biggest lesson for us all is just to be patient. So hang in there and wait for those opportunities to come. Wait for the markets to start to move for you. Give you some heads up. All right, everybody, thank you for being here. And again, we'll do it again next week. Thanks to Nadex for doing these shows, and we'll see you next time. Have a great one. I'm Jim Prince. God bless. We'll see you all again next time. Thanks, everyone.